What is up, guys? A few days ago I made a video that was very critical of Redbox stock, and that's because it's a terrible stock. I don't know why it's being bought by anyone. It should be shorted, especially after the short squeeze has already happened. Ever since then, the stock has continued to fall. So if you're like me and you don't like buying trash stocks, you didn't lose any money on this. But if you bought in where most people did, which is always at the top, you would be down 56%. So yeah, basically over the last 2 weeks, the stock has just been falling and falling. It was $15.27. Now it's only at 6.71. So this, honestly, this is probably just the beginning. It'll probably go a lot lower. It could have like a second kind of short squeeze pump, but I highly doubt it. But even if it does, it's so unpredictable that you can't really do anything. This is just basically a pump and dump. Even like any short squeeze, it's just a bunch of people buying in, squeezing the shorts, and then piling out. It's not really a good investment strategy because you never know where the top is. You would have to figure out how to like understand mass psychology or something to figure that out, and that's like basically impossible for most people. You probably need like a really advanced computer or something. Like I think it's called the Medallion Fund, where they have an AI basically that looks at a bunch of random things that are not really necessarily just financials, and it figures out like short-term price fluctuations and what will happen in certain stocks. But no one in these short squeezes is doing any of that. They're just guessing, piling into stocks, and then piling out of stocks and losing all their money. So yeah, this is why I don't buy bad stocks like that. And not financial advice, but you should probably come up with a plan that you can actually understand instead of just guessing random things and buying random stocks because it's in the news. So yeah, that's Redbox. We have some more clown stocks over here. I have that like strongman personal finance. If you know his channel, it's super funny. So that's why these are all called that. Then we have GameStop. It's not really down that much today. Oh, by the way, Redbox just today down 7.8%. AMC's up 2%. Not really that interesting. These are just my fun stocks. It doesn't matter if they go up or down really, but usually they go down. Let's see, we have Smile Direct Club at $1. Wish stock. I've been tracking this stock. I actually made like 30 or 40% in Wish stock. It was kind of like a speculative bet, kind of before the pump. It was like I think around here I purchased some, and then it went up quite a bit, and I sold it like very quickly because Wish stock, if you don't know what Wish is, it's like it makes Walmart look bad. It's so cheap. It's like a dollar store Amazon basically. So yeah, this is down 93% in the last 5 years. Crazy stock. They lose an insane amount of money. Very bad. Oh, then we have Palantir at $9. This actually rebounded a bit. It was down at like let's see, 671. That's pretty insane. And then in my watch list, I have stocks that I would be interested in buying, or I have like a price target, or not a price target, but like a price where I would buy them. So these, it's not like I would necessarily buy them, but I have an idea of where I would buy them. So we have HP, hasn't really changed much, down 2%, $33. This, if you don't know, is a Warren Buffett stock, so he does own that. Also, they're doing significant share buybacks, and it's quite cheap. Let's see the PE ratio. It's a PE of 6, so that's like a pretty good price. And then we have U-Haul. This, I don't completely understand the company, so my price is lower than if I did understand it. So basically, I know what they do, but the revenue has been increasing like pretty substantially recently. Not super substantially, but higher than I would expect a company like Udall to increase revenue, and I don't understand that. So I have much lower expectations put into my model, and that's why my buy price is lower than it could be if I knew that it was going to continue to grow, but I don't know that, so that's why it's lower. It does have a pretty low P ratio, and I wouldn't think that U-Haul is going to be going anywhere anytime soon. So yeah, a P of 8. I forget the share buyback. I have my price, so I already figured out the price that I would buy it at, so it doesn't really matter. But yeah, this is one that I definitely watch. So if any of these stocks do go down to the prices that I would buy them at, I have on TradingView a notification set up so that I'll just get a notification and I can put in a buy order. I could put in buy orders for all these, but I think in Robinhood, or probably in most brokers, it ties up the capital. So I couldn't have like a buy order for all of these because there wouldn't be enough money in the account, and I wouldn't want to get all these, obviously. So that would kind of not work out. I just want the ones that fall down to the price I want. And then Citigroup, let's see, we're at a 5 PE. This is hasn't really changed recently. I'm hoping it gets down to about the $40 range. And then we have Academy. This one is very cheap as well. It's a 5 PE ratio. They actually pay a dividend like Citi as well. So yeah, I've been looking at this one. May or may not buy that one. I'll see. And then Tesla. This one is still pretty expensive. But yeah, that's Tesla. It hasn't really changed much. Hoping it gets down lower. I just have a lot of faith in the management. As long as Elon's running the company, I know it's going to be doing well. They're not going to make a bunch of stupid decisions. So I just feel really confident about that. And if I can get it at a good price, then I think that would be a really good move. So that's why, even though it's not really close to where I would buy it at, I do have it in my list of stocks that I watch. And then Block stock. This one has gone down so much in the last year. Let's see here, 76%. Let's see, it might have even gone, okay, yeah, so almost 77% for Block. That's insane. So Block is usually just barely profitable. Usually they have a 1% profit margin or something, and I think obviously they can do a lot better than that, but they just they're not a mature company yet. For example, PayPal has a 30% profit margin. So Block, since they own the Square readers and then the Cash App, I think it should be somewhere closer to that, rather than a PE of one, or not a PE, but a profit margin of 1. So even if they had a profit margin of 5, you could put that into your model and get a buy price, and it looks a lot more expensive than it actually should be, or it will be in the future, is what I think on Square. Even if it has a 100 PE ratio, if they can get a 10% profit margin, that would bring it down to a 10 PE. So it's not as expensive as it seems, basically. And then just for reference, I probably won't buy PayPal. I don't really like the direction they're taking the company. It's fragmented across different apps. I think they're kind of incompetent, but if I can get it at a good enough price, obviously it would be worth it. So yeah, that's why I have this one in here as well. It's just not at a price that I like. A 23 PE ratio. They have 2 apps that do the same thing. That's kind of weird. I don't know. I don't have a lot of faith in PayPal, but yeah, so that's my portfolio. Anyway, if you have any suggestions for stocks you want me to check out, let me know down in the comments, and have a nice day.